if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2, and then they migrate to 5. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets. But we make very cautious assumptions, and I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right, and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So
Cathie Wood believes a $1 million Bitcoin by 2030 is conservative. Back in early 2018, Cathie Wood and ARK Invest made a different bold prediction. Tesla stock would be trading at $4,000 by 2023. At the time, many analysts and investors laughed at the prediction. Not only was it highly optimistic, it was downright unrealistic. But Cathie and her firm thought they saw something, so they stuck to their guns. Less than 3 years later, in January 2021, Tesla stock was trading at $4,000 a share on a pre-stock split adjusted basis. Cathie and her unrealistic prediction had come off 2 years early. Now, Cathie and her firm have made another bold and unrealistic prediction, this time for Bitcoin. Revealed in their 2023 Big Ideas presentation, they have 3 price targets for Bitcoin. A bear case of $258,000, a base case of $682,800, and a bull case of $1.48 million. Cathie and ARK Invest have a deadline on these targets of 2030, but in her latest interview, Cathie called these predictions conservative. Why? Because the price models they used for the price targets used very conservative numbers for institutional investment. Make sure to stick around to the end of the video where Cathie breaks down her Bitcoin price predictions and also the impact she thinks the coming spot Bitcoin ETF will have on price. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 15,000 others to become a better crypto investor right now. Now here's Cathie Wood with her Bitcoin prediction.
I first describe what it is, and I ask them to listen very carefully to each of the words that I'm saying. It is the first global, private, meaning no government intervention, rules-based, if I didn't say digital, I should say it now, digital monetary system that the world has ever known. It is a very big idea. And in fact, what I often do is describe what Art Laffer said to me after he finished reading the paper, and he basically said, I think I might have mentioned it, I've been waiting for this since they closed the gold window. Monetary policy has been completely unhinged. There's no discipline. We're going through booms and busts that are completely unnecessary. And I did say to him, I said, if we went back to a private money, and I'll get back to how we help people understand this. He's very excited about a private money, but in studying the history of private money in the United States prior to the Fed, 1913, I said, but Art, that was a period of booms and busts. And he said, yes, but they happened very quickly. What we're doing with monetary policy right now, they happened quickly back then without a terrible amount of damage. What we do these days is plug the dikes and make one monetary mistake after another, and we end up in a global, massive crisis that takes years to get over. So that was interesting. And I did say at the time, I said, well, Art, if this is such a big idea, how big is it? And he said, well, how big is the U.S. monetary base, the reserve currency's monetary base? Back then it was $4.5 trillion. Today it's $8 trillion. He said, there's your answer. There's your answer, how big this could be if this is going to become an effective global monetary system. And so we ran with it, and we have not stopped running, because you're right, we have just begun. And it is interesting to note that, we're up to 19 million Bitcoin, and we're going to 21 million. So the scarcity value argument, the store of value, is going to resonate even more, because I believe when the SEC does relent, and it will, now that Chairman Gary Gensler is calling, the controversy around the Bitcoin ETF his personal Vietnam. So he probably wants to get rid of it. Our COO, Tom Stout, feels that we will have, not we, maybe many people, many firms will be approved for a Bitcoin ETF. And when that happens, that will bring with it an institutional acceptance that really could highlight the scarcity value of Bitcoin. And institutions are not the only story. Thank you for reading our Big Ideas 2023, and in there you see our building blocks to a $600,000 to $650,000 price, and perhaps $1 to $1.5 million price by 2030. We think most people in the world, at the very least, should have some of their assets in Bitcoin as an insurance policy against confiscation of wealth. And that can happen in a number of ways. It can happen outright. So to see MBS in Saudi Arabia lock his cousins up in the Ritz Hotel and just take their wealth, that's confiscation. That's outright confiscation. And then, of course, there's inflation, which is also confiscation of wealth. It's a cruel tax. It's very regressive. And Bitcoin would be an important hedge against that for anyone, but especially for lower income people. So now with the ETF, what is going on? I think, we know the research people at the SEC, and they know what they're talking about. They are really good. We've met the head of FinHub now, who reports directly to Chairman Gensler. And for me, the disconnect is they know so much and they are so good that I believe this was much more Gary Gensler standing in the way. I don't know for sure because they could never say something like that. I just know from how we have discussed Bitcoin with them that they really understand it and they understand its merits. Most important. So this is Gary Gensler. Why he allowed, and I will say he because I think he's the gating factor here, why he allowed a Bitcoin futures ETF, which involves counterparty risk, and not a Bitcoin ETF, which does not involve counterparty risk. In fact, it is backed, ours would be backed by Bitcoin 1-for-1 in cold storage at Coinbase. That's why Grayscale has won its case. It is that argument. And so I think Gary Gensler's personal Vietnam is coming around to haunt him. I do think the SEC is moving now. He has, in effect, said, hey, I'm not the only decision maker. There are 5 commissioners here. That means some of the research that we believe is percolating up to those commissioners might be getting through to them and might be the grounds now for the approval of a Bitcoin ETF. And we don't think that the SEC will approve just one. They will probably approve a group of them. And that means it will become a marketing battle. And we do hope that our research, how much we give away our research, mostly because we feel it very important to educate. It's one of our mission and values. We hope that helps us as we, hopefully being one of those approved, go out and start marketing.
I really want to hit that $1 million price prediction by 2030. And I have your chart that I pulled up from Big Ideas. I'll probably put it up on the screen if you're watching this on video. The bear case is 258,000 per Bitcoin. The base case, 682,000, and the bull case, 1.48 million as your price target. Can you talk to me a little bit about how your team reached this conclusion? Because folks out there, again, they think they're late, but this shows that, I mean, the compounded growth rate every single year, they're very, very early, and this has a huge asymmetric potential.
Yes, if you look at the little table on that page, you'll see the building blocks and how conservative they are. I think, now this is from memory, and sometimes I get one Big Ideas and another mixed up, but I think the institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%, that may have gone down a little, but if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2%, and then they migrate to 5%. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets. But we make very cautious assumptions. And I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right, and the purchasing power of Bitcoin become so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So remittances is another very big market. We assume 10% of remittances in the base case and 25%, instantaneous, no fees or minimal fees compared to 8% fees as migrants send back to their home countries. Sovereign treasuries, 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies and absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case. So that gives you a sense of how we have built those two estimates, and those are pretty conservative assumptions, we would suggest.
So there's Cathie Wood's insights and predictions for Bitcoin by 2030. With a track record like ARK Invest, especially with their 2018 Tesla prediction, it's worth taking a moment to truly consider the possibilities. Whether you're bullish or bearish on Bitcoin, it's evident that we're on the brink of exciting times in the crypto space. Remember, the crypto world is always evolving. Staying up to date is crucial. If you haven't already, make sure to subscribe to my daily 5-minute crypto newsletter. Get expert insights, on-chain data, and all the breaking news you need sent straight to your inbox. Click that link in the description below. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.